Joining us now, KKR partner and co-head of credit and markets, Sheldon. KKR's credit arm has about $200 billion in assets under management. Chris, so we were talking in the break about how private credit has suddenly become the buzzy term on Wall Street, surprisingly because it's really been collecting a lot of capital from investors in recent years, especially, and there's been some muted private equity deal flow, which they're known for financing. What do you think about kind of the future prospects of this asset class? And do you agree with some of the sentiments that, I think Ares, Morgan Stanley, Apollo, all have said we could see a doubling of this in about 5 years or so? Do you agree with that?
I totally agree with it. It's a growing market for a couple of reasons. One, it's just becoming a permanent allocation in people's asset allocation. I think 2022 really highlighted that it's a resilient asset class, low vol, high income, and it actually, is a great place in a portfolio. Second, as a result of the volatility in the capital markets, the borrowers are actually seeing it's actually a great tool in their toolkit to use. And a lot of the sponsors and a lot of the borrowers that never used private credit before are using it now and having a really positive experience. And so as the market grows, and there's $2 trillion of dry powder in private equity, as you sort of alluded, it's going to be continued to be part of the tools in the toolkit for borrowers.
Does that erase some of the IRR potential, though, for some of these lenders, as you do see more competition come into the market? Some have, raised concerns about deteriorating lending standards as a result of that. Additionally, this is a floating rate instrument, so it's typically a little bit more expensive than what you'd see in the public markets.
Yeah, I think what you're referring to within private credit is direct lending and senior secured direct lending. I think private credit is a much larger universe, including junior debt and even asset-based finance, so collateral-backed cash flows or financing against hard assets. So that's going to continue to grow, particularly as the banks retreat. It's also just at this interest rate environment, it's just a great income generator. And I think what we're seeing today is a lot of rhetoric about it, and a lot of buzz around it. But what I don't want to forget is there's a big public market out there, and that needs to coexist too. And both of them need to coexist together and should coexist together and will coexist together. And so we just need that market to sort of come together and have more options for our investors and more options for our borrowers.
Are there steps you think that need to happen to democratize it even more, make it more obvious to the regular lay investor? Education, segments like the one we're in right now?
Yeah, I think you need it to become, I think you need more of a functioning capital markets, right? You need the markets to be wide open. You need M&A to start picking up because, Leslie, as you mentioned, there's just not a lot of activity right now because a lot of it's being fueled by M&A or sponsors or leveraged buyouts. And so I think that just needs to come back. We need a little bit healthier market for, I think, more and more people to realize that it's a permanent allocation. But what we're seeing from our investor base is it's becoming more of a permanent allocation versus coming out of a tactical allocation or an opportunistic allocation.
You mentioned that public credit and private credit can coexist together and need to coexist together. I was hoping you could kind of explain that for our viewers, because so much of the conversation lately has been around higher capital requirements for the large banks. Therefore, there's been a taking of share by the private credit funds in the economy. And in speaking with you and other folks in this area, they say that, no, they need to coexist together because it's an important financing mechanism for what you do. Yeah,
and they will. I think a big part of why private credit is getting so much buzz is because the syndicated markets and the public markets just aren't there. And the banks, what we're seeing out of the banks, a lot of what the banks do is underwrite to sell. Mm-hmm. And just with the lack of M&A, with a lot of the uncertainty that we're experiencing today and even turboed over the weekend, a lot of the banks aren't just leaning in and willing to take that risk. And so what the private credit is offering is a solution, and they're pricing that risk today. But once there is a little bit more consensus in the market and a little bit more conviction, I think a lot of that product will ship back to the public market.